Two signatures. Yes, I
Yes.
Ready? Thank you. Good afternoon and welcome to the May Crop Production and WASDE briefings. My name is Lance Honig and I serve as chair of the Agricultural Statistics Board at NASS. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We're very pleased to have Brooke Appleton, USDA's Deputy Undersecretary for Farm Production and Conservation, join us as Secretary Designate today. We also welcome Dr. Seth Meyer, USDA's Chief Economist. I'd like to share that we do have quite a few visitors with us today. You can see around the room. We've got some folks from USA Rice. We've got some individuals from the Brazilian Embassy. We also have quite a number of employees from the Foreign Ag Service joining us today. So welcome to all of you. Before I turn things over to our presenters, I do have a few notes for our live streaming audience. The WASDE and crop production reports are considered principal federal economic indicator reports. The Office of Management and Budget provides specific guidance on how these important reports are to be released. OMB statistical policy instructs policymaking officials to refrain from making public comment during the first 30 minutes after the release of these reports. Therefore, we will not be taking questions from the public during this briefing. Both NASS and World Board staff are available for phone or email questions, and NASS will host a social media event at 1:30 Eastern Time this afternoon. We strive to have everything presented at this briefing match the official record. However, should there be any discrepancy, always refer to the official published estimates. With that, I'll turn it over to Anthony Perlman. He is the acting chief of the NASS Crops Branch. Anthony will be immediately followed by Dr. Mark Czekanowski, chair of the World Ag Outlook Board.
Thank you, Lance. Good afternoon and welcome to the May Crop Production Report briefing. Today we are presenting the current forecast on several commodities, including winter wheat, hay stalks, almonds, and citrus. And at the end, we'll be discussing the final cotton estimates for the 2024 crop year. Now, before we get to the numbers in today's report, let's look at the data sources we use to establish the estimates. Now, for winter wheat and hay stocks, we have our operator reported survey, which we refer to as our ag yield survey. Now, in May, the sample size was approximately 8,800, with data collection occurring between April 29th and May 7th. Now, for this survey, we asked producers to report their expected harvested acres and yield for winter wheat as of May 1st. We also asked them to report the amount of hay stored on their farm on May 1st. Now, in support of the winter wheat estimates, we also conduct our objective yield survey. Now, as a reminder for this survey, instead of surveying farmers, we survey wheat fields. Now, we send trained enumerators into the fields to make plant and head counts. They go back to the same fields each month throughout the growing season to continue making counts. And as the crop matures, heads are clipped and sent to the NASS Objective Yield Lab for analysis. Now, the month of May marks the start of the NASS Winter Wheat Objective Yield Program, and field work occurred between April 24th and May 1st. Now, in May, the sample size of 257 is fairly small, but we use a phased approach and enumerate more samples as the crop develops across the winter wheat growing region. So this month, we only conducted the survey in Kansas, Oklahoma, and Texas. And in these three states, we only enumerated half the samples. Now, in June, we will enumerate all the samples in these three states and then enumerate half the samples in the other 7 objective yield states. And when it comes to July, we will enumerate all samples in all 10 states, which will bring the overall sample size to approximately 1,150. Now, looking at citrus, in May, we only have Florida reporting. We conducted 2 surveys this month. This includes the processor survey with a sample size of 4. That data was collected between April 30th and May 2nd. We ask each processor how much they have processed to date and how much more they expect to process this season. Now, we also have our row count measurement survey, which shows the percent harvested in the state. Now, data collection for that survey occurred on April 28th and 29th. And then lastly, we have utilization data from the Florida Citrus Administrative Committee, which is the key piece of data and shows the quantity of fruit packed and processed. Now, this map shows how the 8,800 ag yield samples are distributed across the U.S. Now, as you can see on the map, the larger sample sizes are in the major winter wheat producing states. Now, before we discuss the winter wheat acreage yield and production data included in today's report, let's look at the current condition and development of this year's crop. Now, the information presented in this slide comes from our weekly crop progress and condition survey. Now, each line on the graph represents the percent of the crop rated in good to excellent condition between 2020 and 2025. And the red line represents the current year. As of May 4th, 51% of the acreage was rated in good to excellent condition compared to 50% in these two categories at the same time last year. Now, comparing this year's conditions to the previous 5 years, you can see that only the 2020 crop year was rated higher at this same point in time. So conditions are fairly good this year compared to recent seasons. Let's now look at how this year's crop is developing by looking at the percent headed compared to the previous 5 years. Now, this data also comes from our weekly crop progress and condition survey. And again, 2025 is represented by the red line. Now, 39% of the acreage was headed on May 4th compared to 41% at the same time last year. Now, looking across this time frame, you can see how 2025 compares to the previous seasons. This year's development is ahead of the 5-year average pace and is only slightly behind the pace of development we saw in 2024. Now, this will be the final slide we are showing before we get to the numbers in today's report. Now, on this slide, we are combining two data sources to show potential impacts to winter wheat due to drought or abnormally dry conditions. Now, the first data source is the shading from the April 29th drought monitor. The legend in the bottom left corner of the slide notes the severity of drought or dryness in areas of the country. The second data source is shown as blue dots. This information comes from our 2022 Census of Agriculture, with each dot representing 10,000 acres of winter wheat acres harvested. Now, as you can see on the map, there are locations within the winter wheat production area that are experiencing abnormally dry or moderate drought conditions, but nothing extreme. All right, let's now look at the winter wheat numbers that are being published in today's report. U.S. planted winter wheat acres are estimated at 33.3 million acres. That's unchanged from our March estimate, but down 0.2% from last year. Harvested acres in the U.S. are forecast at 25.7 million. That's down 1.5% or 385,000 acres from last year. Yield is forecast at 53.7 bushels per acre. That's up 3.9% or 2 bushels from the previous year. And this would represent the second highest yield on record if realized. Now, production is forecast at 1.38 billion bushels. That's up 2.4% from 2024. Now, as a reminder, May represents the first NASS forecast for winter wheat harvested acres, yield, and production. So that is why you're seeing the NA for the percent change from the previous estimate. Now, looking at U.S. planted and harvested wheat numbers graphically across the past 10 years, you can see how this year's numbers compare historically. Now, this slide is showing the winter wheat harvested to planted acreage ratio across the past 10 seasons. This year's ratio currently sits at 77.2. Now, it is below last year, but would be the second highest ratio since 2019 if realized. Let's now look at harvested acres by state. Let me first give an overview of how to read this slide. Now, the top number in each state represents the forecasted harvested acreage for 2025. The bottom number represents the percent change from last year. States colored in blue have higher harvested acres this year compared to last, whereas the states colored in red have lower harvested acres this year. And then the darker the shade, the greater the percent change. Now, a pound sign pound sign beside the harvested number represents a record high for that state, whereas an ampersand represents a record low. And as of now, no state is at a record high, but Virginia is at a record low for harvested acreage this year. Now, looking at the average U.S. yield over the past 30 years with trendline yield plotted, you can see how this year's forecasted yield of 53.7 bushels compares to previous years and trend. Now, this graphic shows winter wheat yields by state, and it's laid out the same as the harvested map we looked at earlier, with the state average yield shown on top and the percent change from last year shown at the bottom. Now, a decline in yields from the previous season is forecast in many northern tier states, while those in the southern half of the nation are expecting better yields compared to 2024. And currently, California is the only state forecasting a record winter wheat yield for 2025. Now, looking at production over the last 10 years, you can see how this year's forecasted production of 1.38 billion bushels compares to the previous 9 seasons. Now, if realized, this year's production would be the highest since 2016. Next, we'll look at the winter wheat production by class. Hard red winter wheat at 784 million bushels is up 1.8% from last season. Soft red at 345 million bushels is up 0.7% from last year, and white winter at 253 million bushels is up 7% from 2024. All right, let's now look at how NASA's production forecast that we published today compares to pre-report industry expectations. Each blue dot on the chart represents an individual industry member's published expectation of winter wheat production, and the red square represents the NAS production forecast of 1.38 billion bushels. So the NAS forecast does fall within the range, but it is on the higher end of what some were expecting. All right, next we'll move on to the May 1 haystock estimates. Now, as a reminder, each year NAS publishes haystock estimates as of December 1st and May 1st. Now, this year's May 1 haystock estimates haystocks are estimated at 24.1 million tons. That's up 14% from the same time last year and the highest level since 2017. Now, disappearance from December 1st, 2024 through May 1st, 2025 totaled 57.4 million tons. That's up 3% from the same period last year. Now, this map highlights the May 1 haystocks by state compared to the same time last year. Now, we see a mixed bag across the country in terms of increases and decreases, but we do see increases stretching from the upper to lower Mississippi Valley and decreases in many western and southeastern states. Now, on this map, Utah did report a record high May 1 haystocks level, whereas Rhode Island was at a record low this year. All right, let's now look at some non-citrus fruit and nut estimates that are published in today's reports. We'll start with almonds. Now, this does represent our first forecast of the season. Production is forecast at 2.8 billion pounds. That's up 2.6% from the previous year. Now, for peaches, the forecast in today's report represents only California. We will include additional states in the months to come. Production for California is forecast at 550,000 tons. That's up 4% from the previous season and would be the highest production in the state since 2017 if realized. Let's now move on to citrus. As I mentioned at the start, only Florida is reporting this month, so any changes you see compared to the previous estimate or season only reflects what specifically is happening in Florida. All orange production is forecast at 2.46 million tons. That's up less than a 0.1% from the previous estimate, but down 8.1% compared to last year. Non-Valencia orange production is down 0.1% from last month and down 1.9% from last season. Valencia varieties are up 0.3% from the April forecast, but down 22% from last year. Grapefruit production is forecast at 319,000 tons. That's unchanged from the April forecast, but down 2.7% from last season. Lemon production at 1.15 million tons is unchanged from last month's forecast, but up 12.5% compared to last season. And then U.S. tangerine production at 1.06 million tons is unchanged from last month, but down 4.5% from last season. Now, as I mentioned previously, today's report also includes the final acreage, yield, and production estimates for the 2024 cotton crop. Planted acres at 11.1 million are up less than 0.1% from the previous estimate and up 9.3% from 2023. Harvested acres at 7.81 million are down 5.6% from the previous estimate, but up 21.2% from 2023. Now, yield at 886 pounds per acre is up 6% or 50 pounds from the previous estimate, but down 1.6% or 14 pounds compared to the 2023 average yield. Now, production at 14.4 million bales is down less than 0.1% from the previous estimate, but up 19.5% from 2023. Now, production in 2024 represents the second lowest production for all cotton since 2015. Now, this next slide just highlights a few of the upcoming reports through the rest of May and into June. On May 13th, we'll be releasing our cattle county estimates. On May 21st, our farm labor. May 23rd, rice and peanut county estimates, as well as cattle on feed. May 30th, agricultural prices. June 2nd, we'll have our CARES report, which will be cotton systems, fats and oils, and grain crushing. We'll be back here June 12th for crop production. June 26th, hogs and pigs. And then we will round out June with our acreage and grain stocks and rice stocks reports. Now, as Lance alluded to earlier, he will be on X at 1:30 Eastern time today for Stat Chat, fielding any questions folks may have about the numbers in today's report. So this concludes the 2025 May crop production report briefing. As a reminder, today's report and all NASS reports and data can be found on our website at www.nass.usda.gov. With that, I will turn it over to Mark.
All right, thank you, Andy. All right, let's talk about the WASDE. Good afternoon, everyone. A lot going on in this month's WASDE, a lot of moving pieces. As you know, May is always our first official new crop forecast for the new crop year. We're going to incorporate the information we got from NASS this morning on winter wheat and cotton production as well. And then, of course, you know, just over the past 24 hours or so, we have changes in tariffs with China. We got New World screwworm closing off the border with Mexico for cattle trade. And then along the way, we're going to talk a little bit about EU wheat production and Brazil corn production as well. So let's jump in with global wheat production. Focusing on the new crop year here, the final the column on the far right. World wheat production, a new record high wheat production. Led by a big jump in European Union, or really a recovery in in the EU's production. They had a 17-year low production last year, so we're anticipating a rebound this year. Australia down a bit, 3.1 million tons. That's basically back to trend yields, a reduction in both area and yield after a very good year last year. Argentina, increase in area and yield. Kazakhstan, fairly big reduction there too. But again, that's just a reverting back to trend production outlooks for all of those. Well, let's talk a little bit about the EU, because that was the big change, or the big change going forward this month. So this is just a production map of the areas within the EU where wheat is grown. And as you can see, it's grown across most of the country. Pretty evenly spread across most of the EU. Starting out the weather back at the time when the crop was planted, very good moisture, good precipitation, so favorable conditions at planting, and really favorable throughout the winter as well. But now focusing here on just the past couple months up through May 8th. Still pretty good precipitation throughout most of the region. Very good in Spain in particular, recovering from strong recovery from the drought 2 years ago. A little bit of dryness in France. A couple things going on there. It could be a data issue. There is some missing weather data from France, but generally speaking, last year it was very wet, so a little bit of a dryness this year isn't necessarily a bad thing. Temperature wise, not much of an issue at all. Temperatures have been very benign, not too hot, so favorable to wheat production overall. And then focusing in on France, since that is the largest producer in the EU, and also the one area where it looked like maybe a little bit of dryness and heat. In fact, the NDVI looks very strong. So we're anticipating good production in France as well. And then across the EU, just a strong rebound, up significantly, production up significantly from last year, back up to 136,000 metric tons. Yields back up as well, back toward trend. Still early. We're going to obviously be watching this crop as it develops, but this is an early forecast suggesting good conditions for EU wheat. Now, with regard to the global wheat balance sheet, again, I'm going to focus primarily on the new crop year here. Beginning stocks a little bit tighter this year, coming into the new crop year, mainly reflecting tighter stocks in China, Turkey, and the EU. Nevertheless, supplies are up, reflecting the record production this month. Feed use up, reflecting the higher supplies, greater availability. Trade, fairly big jump in global wheat exports. Again, that's mainly the EU, a recovery in EU exports there, given their rebound in production. And ending stocks up 500,000 tons. That is mainly higher stocks in the EU, US, and India. Now, with regard to the US balance sheet, on the old crop year, 24-25, we made an adjustment in food use based on the recent NASS flour milling report. Continued to seeing some strength in domestic flour use there. Tightens up ending stocks a little bit. And then for the new crop year, so the numbers in green there, beginning stocks up this year relative to last year. Of course, we incorporated the production numbers that we got from NASS this morning. Imports for the new crop year down 30 million bushels. That's mainly lower imports of hard red spring and durum. Food use, we expect carrying on the trend from last season. Strong food use up in the new crop year as well to another new record, 977 million bushels. Exports for next year down a bit, 20 million bushels. Record global supplies. It just makes a very competitive environment against the U.S. Given the strong global supplies. Ending stocks up next year, that 923 million bushels. That would be the highest in 6 years. And season average market price, $5.30, down 20 cents year over year, reflecting those higher stocks as well as weaker corn prices, which have an effect also. All right, moving into rice. On the old crop year, just point out we increased Cambodia there. That's kind of the biggest change on the back year. That's just based on a post reporting from Cambodia showing that crop continues to increase. World rice production, another record led by India. And again, 25-26 would be the second year now that India surpasses China as the largest producer in the world. And the rest here changes mainly again, out year, incorporating trend yields and expectations, pointing out again, India raised 1,000,000 tons for the new crop year. That would be their 10th consecutive record large crop. Global rice balance sheet, just a few things I'll note here. Again, focusing on the new crop year. Total use up 6.1 million tons. That's record high here. Trade down, global rice exports down a bit in the new crop year, mainly reflecting higher supplies in major importing markets, especially in Africa. And ending stocks for the new crop year and unchanged from where we expect to end the old crop year. Now on to the U.S. rice balance sheet. Some important changes on the back year there, just truing up to recent data, recent trade data in particular. Imports were raised 1 million hundredweight. That is primarily long grain aromatics mainly from Thailand and a little bit from India as well. With that increase in imports, we raised domestic use by the same amount because you don't import rice to stock it, you import it to use it. So that implies higher domestic use. Exports, on the other hand, lowered 500,000 tons. Again, this is for the old crop year. Mainly reflecting lower exports of long grain rough rice, which more than offset some strength in medium short grain exports to Northeast Asia. And so ending stocks up 500,000 tons in the old crop year. Now for the new crop year, now of course in terms of production, we incorporate the prospective plantings report and our own trend yield forecasts. Production down 2.8 million hundredweight year over year. Imports, expect the strength in import demand to continue. So we rate up 1.2 million hundredweight for the new crop year. Again, that's mostly long grain, as well as a little bit of medium short grain into Puerto Rico. Domestic use higher, reflecting higher supplies. Exports, on the other hand, down 1 million hundredweight year over year. We expect some strength in long grain exports, but more than offset by lower exports of medium short grain. Ending stocks up next year and at 47.5 million hundredweight, that would be an 11-year high. In terms of prices, for the old crop year, we reduced our price forecast 40 cents per hundredweight. That is all reflecting a reduction in the California price. And then for the new crop year, down $2 per hundredweight year over year, and that is lower prices for long grain. Let's move into corn production. Old crop year, you'll see here we raised Brazil's forecast 4 million tons. Now keep in mind, Southern Hemisphere old crop year, that means the crop that's just about to be harvested starting within a month or so. So that's kind of the current crop, but we count as the old crop year in our balance sheets. So we'll talk a little bit more about Brazil in the next few slides. But then with regard to the new crop year, global corn production is forecasted another record high, led by higher production and area in U.S., Argentina, and Brazil. What else can I point out here? Increase in Ukraine corn production, that's improvement in yields. And China, small change there, lower area, offsetting higher yields. So a little bit about Brazil here, second season corn crop, main areas, of course, there where it is produced. Mato Grosso, of course, accounting for the majority of that production, but then spread throughout several of the Brazilian states. Couple things worth noting here, planting for the second crop corn. Again, this is second crop corn that goes in immediately after soybeans. Went in a little bit late this year because the soybean harvest was a bit delayed because the soybean planting was delayed. So we got off to a little bit of a late start, but the precipitation patterns were good. Monsoon rains continued, especially into important times here in April and into May, when the crop can really benefit from it. So generally speaking, the conditions for that second crop corn are good, and it shows up on a very strong VHI as well for this year for Brazil. And so right now, what we are anticipating, again, this is a crop that harvest will start, within about a month or so. We are anticipating near trend yields for Brazil, but that gives us the 4 million ton increase in production that we're forecasting this month. Oops. Supply and use, so global balance sheet. Main things to note here. Production is up for the new crop year and use is up as well. A lot of strength in feed use there. You can see that's driven mainly by increased feed use in China and the US, as well as India and Mexico. We raised China's imports by 2 million tons to 10 million in the new crop year. So consumption exceeds production. In the new crop year again, and US is still the largest exporter with about a third of the global export share. And Mexico is the world's largest corn importer. US corn balance sheet, again, incorporating the information for the March 31st prospective plantings report for area. And our own trend yield forecasts gives us a big increase in production for the new crop year and record production and indeed record supplies. So feed and residual up 150 million bushels for the new crop year, reflecting higher supplies and lower prices as well. Domestic use will also be a record for the new crop year. Exports are up 75 million bushels. Again, abundant supplies and relatively competitive prices. And ending stocks are forecast to be up for the new crop year to 1.8 billion bushels. That would be the highest ending stock since 2019, 2020. That's in absolute terms, but in terms of the stocks to use ratio, so stocks to use, not terribly burdensome because use has increased so much as well since 2019. And the new crop forecast at $4.20 per bushel, down 15 cents year over year. 4.20 is what we had in the AOF forecast as well. All right, moving into soybeans. Old crop year, not too much to talk about there. Reduced Paraguay a bit based on harvest results, but that's more than offset by increases in Uruguay, Ghana, and Nigeria, which don't show up on the list, but they important nonetheless. So that's why we have a little bit of an increase in foreign production for the old crop year. Now for the new crop year, 25-26, main thing I'd point out here, overall, South America production up about 6 million metric tons next year to about 241 million metric tons. And a little bit of a decrease in Argentina production forecast as some of that area in Argentina, soybean area, shifts to corn. And yeah, global supply is up year over year, as you can see. Global soybean balance sheet. Let's start a little bit of discussion with the old crop year, 2024, 2025. Crush reduced 700,000 tons this month. That is a downward revision in China's crush forecast. Trade down, that is lower exports out of Brazil. And stocks up, and that is also Brazil. So lower exports by Brazil, resulting in higher ending stocks within Brazil as well. For the new crop year, beginning stocks, starting off the year with higher beginning stocks than we did at this time last year. And that reflects higher stocks in Brazil, Argentina, the EU, and China. Crush up 12.3 million tons in the new crop year, and that is higher crush in China, the US, Brazil, Egypt, and Pakistan primarily. Trade higher in the new crop year, up by 7.6 million tons, and that is higher exports out of Brazil, Argentina, Paraguay, South Africa, and Russia, which more than offsets slightly lower exports out of the US and Canada. And then if you look at it in terms of global imports, we expect higher imports by Argentina, that's Argentina pulling in soybeans from their neighboring countries, pulling in soybeans from Paraguay and other countries to crush and export. So Argentina, Egypt, Pakistan, Bangladesh, Vietnam, Mexico, and China. Also just worth noting here too that larger beginning stocks in Argentina and Brazil, that means higher exportable supplies in South America, which are going to be competing against US exports. Globally, next year, the US export share declines to 26%, down from 28% the previous year. And that compares with the US global US soybean export share of 40% about 10 years ago. US supply and demand. Small adjustment on the back year, just truing up to recent data. Saw some recent sales strength, especially to markets outside of China. That tightens up our ending stocks for the old crop year by 25 million bushels. Then for the new crop year, again, production determined by prospective plantings and trend yields. So total supplies down slightly. I'd almost, given the magnitude there, supplies essentially steady year over year. Crush forecast up next year by 70 million bushels. That reflects strong domestic demand for meal as well as meal exports as well, along with soybean oil used for biofuels. Exports down just a bit next year, down 35 million bushels. And that, as I mentioned earlier, reflects in part increased competition with South America, where they have higher stocks coming into the new year. Prices next year, we're looking at $10.25 as our first season average farm price forecast for soybeans. At the AOF, we forecast $10. Right, cotton. Back here, small changes, little change there in Australia production is based on harvest results. But looking ahead toward the new crop year, Brazil up 1.3 million bales, reflecting a higher area. forecast there. China down 3 million bales for the new crop year. And what that just reflects, again, this is looking far ahead into the future, but just a reversion toward historic trends. They had a remarkably good year this year. And we expect, just a reversion back to trend, and that would reduce their production by about 3 million bales. India down a bit as well, and that's also reversion to trend yields in India. In terms of global cotton balance sheet, for the old crop year, 2024, 2025, consumption was raised 700,000 bales. That's higher consumption in Pakistan and Vietnam. Also worth noting that we reduced China's imports by 500,000 bales, 500,000 bales, just reflecting the big crop, very good crop they had this year, so less need to import cotton. And then for the new crop year, 2025, 2026, production down a bit globally, 3.3 million bales. Consumption up 1.4 million bales. That is mainly higher consumption in Bangladesh, Turkey, India, and Vietnam, offsetting a 500 or 500,000 bale reduction in China. And trade, so global cotton exports up 2.4 million bales next year, reflecting higher exports out of Brazil, reflecting a large crop there, and as well as the U.S. Some export strength in the U.S. as well. So with regard to the U.S. cotton balance sheet, for us, so the numbers we got from NASS are incorporated into the old crop year, and as you see, they amounted to a negligible change in production relative to what we had forecast last month. So really no meaningful change in supplies this month for the old crop year. But we did raise exports based on shipment pace. So that's up 200,000 bales, and that reduces ending stocks by the same amount. Now, with regard to the new crop year, 2025, 2026, we're coming in with a large carry-in. And there, of course, again, production based on prospective plantings and our assumption on harvested acres and abandonment, maybe a little bit lower abandonment this year in Texas relative to last year. And, slightly lower yields this year relative to last year. So production up a bit in 2025. Total supplies up mainly on those higher beginning stocks. Exports for next year, we see them at 1.4 million bales, stronger than the old crop year, reflecting large domestic supplies and relatively lower prices. And speaking of prices for the new crop year, we currently have our prices forecast at 62 cents per pound. That's down a penny year over year, reflecting those high stocks in the U.S. All right, let's move into sugar. Old crop year for sugar, 2024, 2025. Sugar production down 57,000 tons this month. That is almost all lower beet production, just reflecting processor reporting on beet pile shrink. High tier, we lowered for the old crop this month down a bit. And this is an interesting story, an important story. Actually, raw high tier imports were up this month, but what we're seeing is very high stocks of refined sugar. So we anticipate lower high tier imports of refined sugar for the balance of the marketing year, and that's going to pull that high tier total down for for the balance of the marketing year. Domestic delivery, that's just down based on SMD data. And then looking at the new crop year, 2025, 2026, note here again, high tier, we're currently forecasting much lower imports for the new crop year, again, reflecting very high stocks of refined sugar. So we expect there will just be less of a need to bring that sugar in at the high tier. With regard to imports, TRQ imports, there, of course, early at this point, we're just assuming minimum access WTO binding commitments there. No assumptions on the specialty sugar TRQ. In terms of production, down fairly large reduction in beet production, kind of back to normal yields, and worth pointing out, we also lost production in California when that final refiner closed down. So losing some production there. And ending stocks tighten up by just under 600,000 tons in the new crop year. With regard to Mexico supply and use, small changes for the old crop year. Main thing to note, reduction in exports there, with partially offset by higher ending stocks. We're hearing that Mexico is producing more low pole sugar this year, stocking it to be able to export next year to the U.S. So speaking of next year, 2025, 2026, Mexico imports by Mexico remain, relatively high, down a bit year over year, and we think most of those imports are going into the IMEX program. And domestic use down a bit next year. That is also less from the IMEX program. Is that true? Let's move into meat and livestock. Quite a bit going on here as well. Let's focus first on beef. So beef production for the balance of 2025. Now we're shifting, of course, to calendar years. So for the balance of the year, we pulled production back by 280 million pounds. Now, a couple of things going on there. We do have higher carcass weights, but given the no supplies coming in from Mexico, no cattle supplies coming into Mexico, that's going to tighten up supplies for the balance of this calendar year. And then we assume that continues until we hear otherwise. We assume that border remains closed throughout our forecasting period, which in this case goes all the way through 2026. So if we get no more cattle imports from Mexico through next year, we expect that to result in about a roughly 1.3 billion pound reduction in U.S. beef production. So that's beef. Pork. So for 2025, really for pork broilers and turkey, we're just really, truing up to the latest data. So latest slaughter data for pork shows, suggests supplies tightening up a little bit for the balance of 2025. And then for 2026, pork production up. That is driven by expectations for continued growth in pigs per litter. So productivity growth driving that higher output into next year. Broilers and turkey, just truing up to the latest NAS data for the first quarter. So down a bit in 2025. But for 2026, broiler production up, reflecting good returns and maybe especially good returns given the tightening beef supplies. And then for turkey as well, we're starting to see some improving prices for turkey. So we expect that will finally start to lead to a little bit of a rebound there in terms of production. Speaking of prices, so steer prices this month for 2025, we raised $9 per hundredweight And then into next year, we're looking at continued strength, so up $8.25 per hundredweight through 2026. For hogs, and I apologize, a little bit of an error here for hogs. This hog price forecast, $4.51, actually shouldn't be there because this month we changed our hog price series. The series we were using was discontinued, so there's a little bit of a discontinuity there. But then for 2026 hog prices, we expect to be down a bit year over year, $2.15, just reflecting higher supplies and so higher production. Broiler and turkey prices for 2025, just truing up to recent data. And for 2026, we expect some continued strong demand for both broilers and turkey, providing some price strength and some support there. For U.S. meat trade, so beef exports for the balance of 2025, we pulled our forecast back 22 million pounds this month, just reflecting those tighter supplies. And we, again, with those supplies continuing extremely tight into 2026, we expect a fairly significant year-over-year reduction in beef exports. Pork, for 2025, we've seen some recent strength, again, kind of truing up to recent trends we're seeing in the data, some Western Hemisphere strength, and also anticipating perhaps some exports to China now, given recent trade developments there. So that's giving some strength for the balance of 2025 for pork exports, and we expect that to carry into 2026 as well. Broilers as well, similar story, recent data, and also maybe some more sales to China. And broiler exports for next year, 2026, still up, but we are expecting stiff competition from Brazil to continue next year and maybe limit some of that growth. In terms of beef imports, raised this month for 2025 by 212 million pounds, just based on the pace that we're observing from both Australia and Brazil. Next year, though, we actually see a little bit of reduction in imports. It's slightly counterintuitive, but a lot of these imports, these beef imports that we're seeing from Oceania and Brazil tend to be complementary to the beef that we produce. So with smaller U.S. beef supplies, there could be reduced demand for some of those complementary supplies of different types of trimmings, especially for processing beef. And we'll wrap things up here with dairy. Production up for 2025 and also 2026. Mainly reflecting higher cow inventory along with some growth in milk per cow. And then in terms of dairy trade, products on a fat basis, higher exports, that's mainly butter and cheese for 2025, and also butter into 2026 on the import side. On a skim solids basis, products, some strength in exports for 2025 and into 2026. That is led primarily by anticipated demand by China, which is a big market for whey and lactose dried products. And finally, dairy product prices for 2025, just again, kind of truing up to recent prices there. And for 2026, for the new crop year, higher supplies are expected to weigh on product prices, in which that translates into lower class prices. And our all milk price forecast for 2026 is forecast at $21.15 per hundredweight, down 45 cents year over year. And that's all I have in terms of a brief overview of what we covered in the WASDE this month. Hope it was useful. Hope you got something out of it, kind of some of the logic behind the numbers. I'm going to wrap it up there. Thank you all for attending. Thanks also to the folks online. Hope to see you back here.